Hey everyone, welcome back to the Velocity channel where this is your bridge to financial freedom. Let me tell you something, you don't need hundreds and hundreds of methods and formulas and elements in order to gain financial freedom. You need one method, and that is velocity. You need one method, and that is leverage, and that's what we teach right here on the Velocity channel. We want to make sure that you have in mind the right sequence when it comes to velocity and paying down those loans, which we're going to show you how to do that. We're going to show you how to pay off your cars at the same time as your loans, whether it's car loans, home loans, personal loans, business loans, any loans that you can imagine, student loans. We're going to pay it off rapidly right here and now. But before we do that, I want you to make sure you like, share, and subscribe so that people all around the world can know the power of velocity banking. So here it goes. A lot of times I get the question, CJ, I called up my credit card company and they said they do not accept direct deposit. My line of credit, I got a personal line of credit, and they said they don't accept direct deposit. Visa, MasterCard, doesn't matter. They do not accept direct deposit. Well, that's because they don't know yet, right? We have not got the elements in place to make sure that people get a direct deposit inside of the credit card yet. Okay, we are working on that, but it hasn't taken place yet. And so until that happens, guess what you got to do? You're going to have that direct deposit deposited still in your checking account. Now, from your checking account, and this is the good news, you can transfer to your line of credit. Now, did you know that I know Navy Federal Credit Union does it, and I know a number of credit unions do it. I don't know about the banks yet, but I know that as soon as you transfer, I'm talking about as soon as you transfer, that same day, you actually get that amount of money in your credit card. You get that amount of money in your line of credit. So whether it's 200, 300, 3,000, right? You can transfer from the checking account to the line of credit, and you've got it the same day. You used to have to wait a few days. I mean, that was back in the day, I guess, because I called up one time and I was like, yeah, you got to go ahead and make a transfer. And Navy Federal Credit Union was like, yeah, you want it available today? I was like, today? Oh man, I thought I had to wait a few days. They were like, no, you can have it today. And I said, wait until I tell these folks this. So you can have it today, same as checking, okay? And that's why I say you can use the line of credit, whatever it is, whether it's a credit card, personal line of credit, whether it's a business line of credit, whether it's a HELOC, you can use this as your new checking account so that you never have to worry about a minimum monthly payment again. And you'll never have to worry about it reporting to the credit bureaus. Because you see, when you only use your checking account, it doesn't report to the credit union, right? Or to the credit bureaus, folks, right? And so you're missing out on limit increasing opportunities, which is what happens each time you pay that line of credit off. Now, let's go through this. From your line of credit, you're going to be paying your bills and your debts. B&Ds for short, okay? So remember, it's your line of credit that takes the priority. Now, I know that the question comes up, well, CJ, what about if my line of credit is not that good? I mean, I got a 20% line of credit, and it's not really something that I'm comfortable using because of that 20%. Well, let's do this, okay? Let's back up, okay? And remember that the line of credit is going to be calculated in simple interest versus complicated interest. Now, the complicated interest, that's when people get nervous, because it's complicated interest. I mean, it's interest that, if I showed you on the board, you'd immediately punch out because it's too complicated. And it increases in interest. Isn't that something? Isn't that something how that works? And so it's an increased interest with complicated interest, meaning The 20% that you see, right? Or the 6% that you see, if it's calculated with complicated interest, it's going to be more than the 6%, okay? It's going to be way more than the 6% simple interest. But they can say that because it's calculated on another scale, okay? Watch this. This is what I mean. We have 32 degrees Fahrenheit, and we have 1 degree Celsius. Which one do you think would be hotter? 32 degrees Fahrenheit or 1 degree Celsius? Which is hotter? But what if I told you 1 degree Celsius was actually hotter? See, because we've been programmed to think that 32 is greater than 1. But we were never told that the calculation was different. That Fahrenheit and that Celsius makes a difference, doesn't it? The same with simple interest and complicated interest. And so that's why I am an advocate of making sure that you're using your line of credit because it's calculated at simple interest versus complicated interest. Now, please, please, please check your terms and conditions because we now live in a day and age where they can slip things in without you even noticing it. Okay, so I want you to get in contact with me, and I can make sure if you want to. Absolutely, my team can make sure that it's a simple interest or not. If you have any concerns with that, so let's get back over here and let's say $1,000. Right? You're going to use in that line of credit, and let's say $1,000 at 20%. Yeah, you got the bills. Yeah, you got the debts. You know how to do the velocity banking method, but you're nervous about that 20%. Well, let me put your nerves at ease because this $1,000 at 20%, we're going to go ahead and calculate that out. Okay, let's do that at 20%. And you probably don't want to see that, so let's go do this. So get this, $1,000, right, at 20% is $200, okay? It's $200. Can I ask you a question? Is $200 worth spending the $1,000 for? Is it? Is $200 worth spending with the $1,000? And so, in other words, if I gave you $1,000, would you think it was a bad deal if you gave me $200? After all, I gave you $1,000. And you don't have to give me the $200 up front, okay? Because I'm giving you $1,000 now. You can pay me $200 over time, a specified space of time. Would you think that was a bad deal? No. And that's why the line of credit is so powerful, okay? And you can use your checking and your savings account. Yes, you can, but it's not going to report to the credit bureau. And it's going to stay stagnant. We don't want the credit line to stay stagnant, okay? We want to keep moving. And that's why we utilize our direct deposit or our checking account to pay for the line of credit. Because as we're paying the bills and the debts, remember what we're doing. We're consolidating our line so that it's no more segregation of income. We're consolidating it so that we can deploy it more efficiently. Now, let's go ahead and go over it. So we have the $1,000 at 20%. We're going to be paying that $1,000, right, that we just deployed to the bills and the debts. We're going to deploy that to the line. And since we get paid, right, according to the cash flow, we divide our balance by the cash flow, and that's going to show us how many months we'll be out of that particular debt. And so, folks, I just wanted you to see how powerful, right, this line of credit is, so that even if you're at 20%, okay, that 20% is only applicable, and this is powerful, if You have the $1,000 for the whole year, but are you going to have it for the whole year? So you're not even going to pay the $200. It's going to be less because you believe in moving your money the correct way. This is how you pay for loans. This is how you pay for the student loan. This is how you pay for it with your line of credit. But never forget the sequence. Direct deposit into your line of credit, okay, into your checking account. Then from the checking account, deploy that money to the line of credit. From your line of credit, pay those bills and those debts, okay? Oh man, it's so much easier too, isn't it? It's so much easier because all you're worried about paying is your line of credit. You're going to be paying that with your checking account. And this line of credit, you'll see, will become an asset because that's what it was made to be from the very beginning. God bless. You guys have a great night.